The S&P 500 E-mini. It is a index future. You can trade it on the upside or the downside, so you can make money on the long side or the short side. Got some new people coming in today, so welcome aboard. You're coming in as guests. Hey, Peter O, welcome. Good morning. Welcome back. Hey, Douglas G, I'm still waiting for you. Give me a quick high sign that you're there. Hey, Kirk, good morning. If you're coming in or joining us, put up an S&P 500 E-mini chart. If you don't have charts, let us know. Should see a series of 3 charts in a separate chart window. 2 time frames for the S&P 500 E-mini. And a 30-year bond chart. We're looking to do 2, 3, maybe 4 trades this morning. We look to do that on a daily basis, depending on market action and activity. Depending on market action and activity. Saul Shul is your host and mentor. He's been actively scalping for about 25 years or so. This is a trading method. It's a price action trading method. It's a taught experience. So if you want to learn, join us as a monthly and then talk to us about being part of Saul's course and his mentoring work. Saul comes in right around the 9:30 bell. He gives us our levels. He gives out his proprietary scalping levels, the ones he's using in his own trading. Plot them. If you want to know how to plot them, let us know. Make sure you practice trade until you get it right. Practice trade until you get it right. The key here is to try to develop consistent profitability so that you can stand up as your own trader. And what I mean by standing up as your own trader is to be able to come in the morning, set up your trading platform, organize yourself for the day based on a price action trading strategy, and then apply that strategy and be able to walk away with money in your account as a seasoned trader. And price action trading is what we do here, what Saul has seasoned himself and honed over a significant period of time. And again, I think it's important to know that there is risk in trading. And if you're taught, well taught, you got a shot. Don't hesitate to ask questions. Saul loves questions. Again, try to set your charts up the way Saul has his. Very simply presented. Doesn't have a lot of things clogging his brain as he goes about his trading business. Now, if you have questions, don't hesitate to ask them. Saul, again, loves questions. If you need to be set up properly based on your trading system, or try to set up better in your trading system, or you're just unsure, ask the question. For those that are part of Sol's Monthly, we spend time on the telephone and try to help you out where we can, because you've become part of the family. If you, well, usually his monthly is $379. It's on for $100. We're going to raise it up February 1st to back to $379. So make your decisions wisely. I'll be in the background. You can always post. And ask for me, and we can always set up a time to talk privately too. If you're interested in taking your monthly service and graduate on into Saul's trading class and his mentoring service, that's an option for you also. And again, if you're coming in, from the outside, look for the link. Join us live in Zoom. I know there's a lot going on out there in the media about stocks and the participation of individuals that are looking to make some money based on trading stocks, trading futures, trading commodities. There's a big resurgence in individuals taking their opportunities into their own hands, which is great. It's nice here because we're teaching you how to trade and how to develop consistent profitability, in the world of index futures, which are quite advantageous to trade. And there are a number of reasons. If you want to talk about them, let me know. And of course, in the service, you have Sol, right? Hey, Christina, welcome. Hey, Doug, did you get back yet? Doug G. Hey, Ian. Hey, Timothy. Hey, Warren. Good morning. Hey, Christina, use the chat feature. Let us know what you're trading. Hey, Dan. Dan W. Hey, Dan, were you in before? Just let me know in chat. Again, if I don't hear from people, I just disconnect you. Hey, Dan. Hey, Dan, did you sign up for Sol's discounted monthly? Oh, that's great. Just let me know back in chat if you did. I can send it out to you again. Hey, Dean.
All right, good morning, everyone. Can everybody hear me all right? All right. Well, after a crazy bit of a ride yesterday, we are trying to come back a little bit today. We had GDP come out for last quarter of the 2020, and it was grew at less than expected, but overall it wasn't too bad. They were expecting a lot less, and so the market came back here. Follow-up trade after the number came out, as you can see. And now we're just kind of hovering here, and we'll see on the highs. We'll see what the day brings. All right, so let's be careful here with the volatility for some kind of follow through from yesterday. So we'll keep that in mind. Probably about 4 or 5 points in our with our stops, so we can make sure we stay in the game here. So let's give you our levels for this morning. Our pivot this morning is 37.67. 37.67. Resistance at 75, 85, 93, 3801, 14, and support below at 56, 49, 41, 31, and 23. Pivot 37.67, support below at 56, 49, 41, 31, and 23. Resistance on the upside at 75, 85, 93, 3801, and 14. So we had a very nice comeback here from yesterday's low to where we're at. So we'll see what the day brings. Again, we had the GDP numbers that came out already. And let me see if we got anything else coming out this morning. One of the reasons that we had a little bit of a sell-off there was probably that I've heard that there were a couple funds that had to be liquidated because of what's going on with this GameStop situation. Created a little bit of a problem for them. And then the numbers actually, Apple came out with some good numbers, and NASDAQ saw a little bit higher this morning. So we've come back pretty nicely here. So we'll see what happens here. We do have new home sales coming out at 9 o'clock, and in addition to leading indicators, also at 9 o'clock. So we got a couple numbers. We had GDP that came out already, and I said that was probably the biggest one. Initial claims also came out, which wasn't as bad as they expected. It was still 800 and plus, but not as bad as they were expecting, as the market kind of opens up here and drifts down a little bit. So then we had retail inventories, wholesale inventories, all those things came out in GDP. So we had a slew of numbers, and the GDP and the initial claims probably the most important ones. New home sales now coming out here at 9 with leading indicators. Both of those could be market movers, especially since it looks like we're a little sensitive to the numbers this morning. So we'll see what happens. All right. So we drifted down quickly down to the 63, 64 area, popping back up here a little bit. So again, just be patient here. The volatility here is a little bit greater because of the sell-off yesterday. So we're going to have a little bit of a backlash. All right, market upticking here a little bit, coming up here to the 75 area. Again, just traded very carefully. Lower your contract size, lower your risk. And the only way you can do that is probably, like I said, contract size until the market settles down a little bit. And market is very taking it all in from yesterday's big sell-off. Again, I think a little overdone, but most sell-offs, most big moves are always overdone. I don't know if there were fundamental reasons for the move, but it did occur. And all it did was give us some opportunity to trade, which again, the problem was yesterday afternoon was it was, FOMC, so it was tough to get too excited about trading that craziness yesterday afternoon too, because of the FOMC stuff, which we don't like to be around. And he did say things that affected the market and made the market kind of get even more, added a little fuel to the fire as we come off our. All right, nice little opportunity there if you traded the 75 area there. Yeah, nice little push coming down here. Got at least 3 points on the trade here. So nice rotation there off of that 75 area. Maybe the spike in volume there helped you stay with the trade a little bit, as a big spike of volume right around the 74 area. So if that helped you stay in the trade, maybe it did. And you got a nice little rotation here off of it. Again, take what the market's giving you, and especially these days when it's whipping around as much as it does, you're going to get ample opportunities to trade, at least hopefully for the next couple of days, right? I mean, we don't know, but so once we got above here, pop back up. Next level resistance we have is all the way up at 85. So we had a little resistance there around the 70. We got up to 475 and then stopped, but at least we got filled there at 4.5, and then popping back up here again. How you scale in, all that stuff is important. Keep that in mind. If you scale in at 74, 75, or 76, that's fine too. Whichever way that's going to keep you, focused in on the trade, have a chance to make money on the trade. And if not, just keep your stops in too as well, because you have to. And that's all there is to that's all there is to do. And like I said, you're going to get many opportunities to trade no matter what. So welcome to some of the new folks that are here. We're trading mini S&Ps. We're looking to take advantage of ebbs and flows of the market. We don't believe that markets go straight up or straight down. We're trying to find those inflection points that give us an opportunity to scalp the market. Those opportunities are there using these levels that we gave out, plus also price action opportunities that occur once the market paints some bars. So a combination of the price action activity plus our levels creates opportunities for us to trade and to try to be profitable. All right, nice rotation there against the 75 level that we have. We got up to 76, 75 there and came off. If you're scaling in quite above and below, either way, you should have been able to make a little bit of money on this trade. And remember, we have 4 to 5 point stops, same amount of profit potential, and we're getting it right here. So nice rotation there off of our area of resistance on the upside. Again, we are just trying to take advantage of market movements back and forth, and using the levels that we have given out. The 75 area there worked very nicely for us, and we're trying to take advantage of these opportunities where we can try to make some profits. All right, whoa. So let's stepped away for just a minute here and came back, and look what it did. Popped all the way up here to, got through 85 like it wasn't even there, coming right up here to the 93 area. Again, 93 area here. It's paying us off very nicely. Again, you gotta keep your stops in. Like I said, we never know when these whatever is creating these opportunities, or the volatility in the market presents itself, right? We don't know why or when these things are going to happen, these stops, where they're at. We can just try to just trade the market, whatever it gives us, and pop right through the 85 there, and then came up here right up to 93. Got a nice rotation here off in the 93 area. If you got in 92, came all the way back down. That's why you got to keep your stops in there. Can't stress that enough. Only because it is what it is. This is stuff's got to have moments like this where you just never know when these things are going to happen. And we talked about making sure you trade smaller, and so that you don't get yourself caught up in one of these moves here that occur, out of nowhere. I mean, who knows? Somebody might be talking in the background saying something, but we came right up here to the 93 area and coming off. Again, the earnings reports from some of these companies were pretty decent, so at least Apple was, and Apple's always decent. Never seems to, their estimations are always like, not their estimations, but they're always like putting out like warnings that they're not going to make their number. They always seem to make their number. So that's, I guess, the way they work. But it is what it is. And so the market coming off our 93 area here kind of flew right through 85. And then coming up here to 93, and then coming off here again. If you keep your stops in there, you get out and you come back in at 93, you're doing, probably doing scratched it maybe and making a little bit of money. Even if you kept both of them right now, you're making, sometimes these things happen where unless you have a mechanical stop where you're going to get stopped out. But if you, it looked like it just flew right up there, you probably never had a chance to even think about getting out of both, or one of the first one. Just the way it trades sometimes, and give yourself a chance here to come up to the second opportunity. Again, you just got whatever your risk tolerances are. They are out there. You got to just trade the market according to that. And if you put your stop in there, come back in at 93, you did okay. Hopefully you didn't get run. Well, if you didn't get you probably got run over on the 85, but missed. But you should have been able to do the 93. The trick is to be able to stay focused and take the next opportunity when it presents itself. All right, we flew right up there, got above that little rotation off of the 75 area that we had, and then flew right up there all the way up to 93. Again, market is a little bit volatile. Somebody could have said something. We're not going to try to figure out who said what. Maybe just hit some stops. We'll go with that route, I think. Let's see. Wall Street on Wednesday logged its worst day since October, despite many catalysts that could have been utilized by traders. On the surface level, things appear to be positive for the equities, like the unwavering support from the Fed, while the central bank flagged a moderate recovery. Chairman Powell made clear the U.S. central bank was nowhere near exiting massive support for the economy, left benchmark interest rates near zero, and repeated a pledge to maintain a bond buying program at the current pace of 120 billion of purchases per month. U.S. stock indexes still fell again overnight. Coronavirus vaccine delays and a much anticipated pullback from all-time highs can serve as an excuse to book profits, but worries are growing. Dealers said highly leveraged investors need cash to cover losses, which is what I heard that some of these hedge funds get themselves in trouble with this GME stock. And nice rotation there off of our 93 level. Crazy little trade here there, but hopefully we're able to stay focused and take advantage of the trade. For those of you who missed the levels, they are, if you look at the chat box area, we've put those levels out this morning. There they are, and if you can use those as a kind of a guide for us. Dealers said highly leveraged investors need cash to cover losses elsewhere as retail investors involved in the Reddit channel continue to shift the power dynamics on Wall Street. While some may dismiss what's going on as irrelevant gamification of stock trading, the instability could create broader market losses and upend the traditional trading model. Flows and versus fundamentals, momentum versus value, day trading versus investing are hot topics that are set to trend this year as wild retail investor enthusiasm plays out in the market. Yeah, unfortunately, I think they're probably going to have to come up with some new rules to modify what they're doing. It's pretty amazing, though, right? Well, I mean, if you have enough people coming in there and putting in a small amount of money, it gets become a big amount of money. I mean, the stock is trading at $400 and some dollars, $420 a share. At least it was this morning pre-market. I mean, for the 52-week low was $4. I mean, it's over 1,000% gain. So I'm probably going to have to do something about that situation and how that sphere is evolving of trading. Yeah. So about 44 circuit breaker halts were triggered in the first 2 hours of trading on Wednesday as volatility reigned high as cult favorites of GameStop, AMC, Express, Bed Bath & Beyond, Nokia, and Koss all halted trading. The halts give traders time to digest the news and adjust their trades over the typical 5-minute pause, but have done little to help smooth rapid movement generated by the WSB Reddit army. The wild swings also saw online brokerages, houses like Robinhood and Charles Schwab E-Trade and TD Ameritrade hit by extended service disruptions. The mob mentality on Wall Street bets is stirring regulatory and legal concerns, as well as attention of the White House. Treasury Secretary Yellen is monitoring the situation, but the SEC is looking into the short and gamma squeezes that are sending some shares sharply higher. Brokerages are even restricted trading on and options activity in GameStop. NASDAQ CEO suggested that her exchange could halt trading activity if a stock was targeted by internet users, which would enable investigations into possible manipulation and allow investors to recalibrate. So what's happening is that you're getting this group of people putting in small amounts of money that creates a large amount of money. Then they are able to go and manipulate smaller stocks because they don't trade that much and create a bubble basically in that stock or in GME stock, basically a short squeeze. All right. I mean, the stock is now worth $420, but There's a lot of shorts that are getting bamboozled here and being forced to go out and get out of the market. The problem is that they have large amounts of shares, and you see what happens on our market when there is news that the Fed is coming out with some news, or at 9 o'clock here, you'll see that the levels of volume in the ladder tickets are very decreased, right? 10, 20 lots of this at 20 contracts in one time, 10, 20 contracts in one time. So these shorts, which again were trading when the market had a position when the market was trading in a calm, sustained manner, and there was some volume both sides, are getting short squeezed. So they have a lot of shares, and there's no volume to get out of their position, and the market, they're being forced to get out of the position because of margin calls. So you got let's say 100,000 shares, and at each price there's only 10 contracts available, or just to give you an example. So it becomes, to get out of the stock, you're going to rally the market like as it rally the stock 100 points because you have to get out of the position. So you've got these like moves that are occurring because you're squeezing. All right, so something's going on here in the market, whipping back and forth here very quickly. It's not 9 o'clock, so somebody's saying something. All right, support. Just be careful here. Support. I'm not. I'd just be a little bit careful here. I don't know what's going on here, but something's up. It's like a weird time for this action to be happening right now. It was okay a second ago, and then all of a sudden it's getting crazy. It's not even 9 o'clock. This is so weird. Look at it. It's like, what is happening? It's not going anywhere. It's just going back and forth in like 4 or 5 points moves. Can somebody punch in the levels again in the chat box area for us? Very strange time, very weird trade right now going on. This is very strange for this time of the day. There's our levels in the chat box area. Thanks, Mark. So just hang loose here. Just let it hiccup. No idea what's going on. Somebody was having fun out there. No, you can't look. GameStop as a percentage of the first of all, as a percent. First of all, it's not in the S&P. Okay, that's the first thing, and it's going to affect the market as a whole. It doesn't really affect the market as far as the value of the stock is concerned. So it's too small a stock to be able to affect the market. The problem with GameStop is not what effect it's going to have in the market. Is eventually how this kind of situation is going to hurt investors. Like I said yesterday, one of the reasons that I think the market was opening up a lot lower was there was a hedge fund that was in trouble and it was going to have to liquidate because they got short squeezed here with that stock. So you're going to have, if you're going to this thing occur more often, you're going to get a lot of situations like this where other hedge funds are also going to be in trouble and are going to have to liquidate. And then you get you get a hedge fund that has to liquidate. They have a whole bunch of stocks. That can move the market, and also bad news. A hedge fund having to liquidate is bad news because those guys are supposed to be the smartest people around and they know how to hedge themselves against, and then they get effed over. So yeah, it becomes a little bit of a bigger problem for the market if that continues to happen with these smaller stocks that get themselves in a short squeeze, that a group of internet investors are moving the market one way. I mean, it's one of those things that feed on itself, right? You get past the level, and probably the shorts, if fundamentally the stock should not be at $420. I mean, it just doesn't happen. I mean, there's no reason why that stock is going to be a trading, but there's going to you have shorts out, the people who are getting short this stuff, and big institutions and whatever, and then it keeps going up another 100 points when you're like, what is happening? Fundamentally, it's a problem for the market on a bigger picture, because if they can do this with, I mean, these guys, there's a lot of traders out there trading a lot of stocks and they know about a lot of companies that we haven't even heard of that have stock that they short or long it, whatever the situation is. And, if you get a group of people that can, move the market, move a stock and create outside influences like hedge funds getting blown over, it's a problem for the market, especially since the valuation of this stock is not, it's ridiculous. Like we talked yesterday, that and then the options also, they stopped trading the options because people were getting hurt on the options. Your options were $100 option was trading at $42. I mean, that's $300 away. Who trades a $300 an option, $100 put, $100 option on GameStop was trading at $42, and the stock's trading at $400. I mean, that's ridiculous. That's if anybody's traded options, that's the options market. Not well. The options market. Well, do the options move markets? If they have to, if they can, you can have a position where you're covering your option position in the stock market, which is a hedge, which is fine. I mean, there's nothing wrong with that, right? That's how actually everything's supposed to work. I mean, most people have stocks in their portfolio, and you protect yourself against volatility by putting options on. So, as long as you own the stock, it's okay. So you shouldn't be. But if you're just using it to as a speculative reasons, then yeah, they could move the market a little bit. But options are more going to be related to the stock price versus the other way around. But they could. Anything is happening these days. Electronic trading is, algorithms, right? These are making these things happen. They're dangerous. And we are really flipping around there. This is like weird a trade at this time of the day. And the number is out. Maybe they had a leak on the number, right? I mean, that's the only thing I can imagine. So maybe that kind of created that little push here, a little big 600 lot there at the 90 price, keeping the market down a little bit here, a little buffer. At least if we get through that, then it'll probably pop up a little bit. Again, probably the number was released a little early. I can't imagine any other reason we're having this kind of volatility. Goofy little area here. All right, we continue to uptick here. Next level of resistance we have this at 3801. Very, very thin as we're popping up here really quickly. Again, volatility here. Welcome. And look at this. This is like very strange. Just be very cool here and just relax. I don't know what's going on, but there's like very light volume here. You can't even see it. It's going so fast, but the quickness of the volatility is very, very strange given this time. Almost gave you 38 even. I was debating whether I should put 01 or 38 even. Well, if you did get in there at, well, depending on how you're scaling in, maybe you got in there a little bit. Got right up to 90, almost 38, straight up. Obviously, the 01's a little bit more tenuous now. So, yeah, it's pretty amazing, right? Pretty amazing move here. So we got 14, 23, well, 14 above 01, 23 above that, and then 31, 41, and 53. So basically what they're telling us right now is yesterday's move, they were just joking. They were just joking. All right, so again, trying to keep you so the levels above, if we can print them up above the 14, we have 23, 31, 41 and 53. All right, so we drifted, it got right up to 38 even almost, and came off very nicely there. We had 01, again, depending on how you're scaling in, maybe you did get in there. Like I said, with the volatility, probably 2 points above and below, maybe more even, just because it's whipping around so much and quick. And like I said, it was a weird time for it to be doing what it did right before 9 o'clock, and I'm almost gonna step out and say that it was probably they probably leaked the number out just a little bit. At least somebody did, because there was definitely a continuation rally up here to the 3,800 level. So basically, we've pretty much recovered all of yesterday's. Well, yesterday's that trade after we opened up. Not we opened up a lot lower, but then we gapped lower and then continued lower. But we've recovered all of that. And again, the market I think is a little spooked by this GameStop thing with the hedge fund having to liquidate a little bit. I think there was fears that others might have to be doing the same thing. I mean, but then Apple came out with earnings, which of course were better. They're usually better, even though pre-market they were down. Tesla came out and they missed, and they were down like 5% pre-market. Facebook came out, they were down a little bit. I'm sure they're probably all up right now, if I'm a venture to say, just by looking at the price action here. Let's see, Apple's still down on the day, at least as of a little while ago. Anyway, Facebook is up, and Tesla is down. Whoa, Tesla is $800. What the hell? It's down $46. That's less than 5%, almost 5%, a little less. Crazy. I didn't know that stuff. I forgot how high that stock got. All eyes this morning will be on the Commerce Department snapshot of fourth quarter gross domestic product amid a surge of coronavirus infections across the country. GDP is expected to have slowed to an annualized rate of 4% versus the historic 33.4% expansion seen in July to September period as the nation emerged from its severe lockdowns instituted during the early stages of the coronavirus crisis. While it's skewed comparison to the United States in 2020 is forecast to record the worst performance since World War II and well below pre-pandemic levels. GDP figures could drive renewed efforts towards additional stimulus relief. The Biden administration has already unveiled a recovery plan worth $1.9 trillion, though some lawmakers have balked at the price and questioned the direction of the funds. Following the $900 plus package passed in the end of December, economists expect growth to further slow down in the first quarter of 2021 before picking up steam into the summer as more Americans get vaccinated. Speaking of which, I got vaccinated I got a vaccination shot. I don't know if I got vaccinated, but I got the shot yesterday, day before. My arms doesn't hurt. Feel all right. They give you a little piece of paper telling you that you got to call the and not call, but enroll on the website that you got a shot at CDC, and then they follow up with you as the market continues to come up here. Again, be careful here. Deal one, trade it very lightly. Take the upper end of the range, maybe, depending on how you're trading it. All right, nice little rotation here off of this 01 area. Is really slipping around here. We have to trade lightly. You're trading less contracts. You're trading. You're not trading multiple contracts, and if you're only trading one, you're maybe not trading at all until this thing settles down. Market is not trading like that. The market is whipping around. We're going to be at almost 1 million contracts before definitely before 9:30. We're going to be at 1 million contracts traded, so that's a lot. It's good. Good volatility. No, you have to trade lightly, not the market. Only because it's whipping around so much. All right, so we get above this 2-3 area. I think definitely have a run up to that 14, which was probably a place where it's going to be targeting, at least initially. Amazing little market. Well, I'm not surprised. The volatility, I'm surprised at the volatility, actually. A little bit, but not at the comeback, because like I said, the numbers were pretty decent from those big customers, Facebook, except for Tesla. But Apple did well. And I think most of this was overblown yesterday. I think it was more panic-stricken sell to the downside yesterday than anything else. And you get that herd mentality type of situation happening when when you're afraid that it's going to affect a lot of other hedge funds and create more movement to the market, more downside move. You always get one move that's overblown. All right, so next level on the upside we have is at 14. The 01 area, because there's no one number price, right? Worked for us, whether you got in a little bit below or got in a little bit above. At least I got up to 01 and then floated back down. If you traded that number straight up, you did all right. Now we're looking at 14 as the next level on the upside. We have bought it anyway. I mean, I wish I could have said that the market was trading normally enough to buy it at certain areas, but it was goofy at the time when it was doing that thing right before 9 o'clock. It did go to a buy area, but again, it's hard to suggest it because of what was happening. All right, so next level, 14. They were just joking yesterday with that big move to the downside, as you could tell. You as a trader, it was Don. Don created the volatility yesterday. Don, they're blaming you for all that movement yesterday. I didn't see him at the Powell. Was he at the FOMC meeting? He was probably sitting on the FOMC. The moon did it. Don said the moon did it. See, there's a man who just tells it like it is. He's not taking any credit, giving the credit all to the moon. Inside joke here for some of you who are not. He was in the background of the meeting. Yeah, he was probably sitting behind Powell, first row, one of his advisors after he sold the market off. I get it. Oh. All right. We're floating up here on the highs. The next low resistance we have is 14. A little buy would be back all the way down at 75 area. Really, I mean, you could maybe step out and buy them around the 90, 88, 89, 90 area. If we get back there, if we want a closer spot to buy it. All right, well, the market just continues to uptick here. We kind of layer in reasons to trade. I mean, just because the market's going up, I'm not going to tell you just to jump in and buy it. I'd rather you wait for a technical reason to find a level to buy it. That's why I'm suggesting the 89 to 90, 88 to 90 area versus just jumping in. I mean, not really a good reason to buy a market. Just say, well, the market's going up, I'm going to buy it. It's not what we're looking for. And it's okay if it doesn't get to that area. It's fine. They follow it very closely. I mean, actually, sometimes the E-mini, the S&Ps follow the E-mini, and then sometimes the E-mini follow the S&Ps, depending on what is in the market at that particular. So the number of contracts that are being traded usually is the indicator. Sometimes you get a big order in the S&Ps, in the big S&P, that will fall into, or because the guys in the big S&P pit are hedging their trades with the minis. Because usually what happens in the pit, you're only getting orders one side, one way at a time. So sometimes you get it both ways. It all depends on who's in the pit, who's trying to hedge and stuff like that. But so yeah, but right now it's neither here nor there because they're not trading that in the pit right now. So for obvious reasons. I gave you those levels. We got 14, 23, 31, 41, and 53. right? As you can tell here, they kind of got up to 6 and it came off. It's hard to say, if you just say you wanted to buy it because the market was going up and now let's say you bought it at 4. Now what do you do? That's why you got to wait for the market to at least go to a technical support area for you to say, all right, I'm going to think of buying it. At least you have a better chance of making a little bit of money than just buying it willy-nilly. That's my thought. Anybody have any questions? If you put them in the chat box area, I can try to get to answer them for you. We are here trading mini S&Ps. Obviously, we have a lot of volatility today. Some quick opportunities, and markets are moving kind of fast, but you have to stay focused. And it's been, except for one level where it kind of blew us out of the water, which again happened so fast that maybe you were able to get both the 85 and the 93 area because it just, or if you got stopped out, you got back in, one or the other. But for our levels so far have worked out okay. We haven't really found a place to buy. We've been telling you to trade smaller. We've also been telling you to not trade because it's kind of acting a little strange, whipping around at weird times. But that's futures trading. We have no control over when it's going to get busy and when it's not. But our levels have been doing okay, even though this is kind of moving around a little goofy. Hopefully, we're trying to keep you out of trouble. That's the other objective here. In addition to trying to make money, is don't try to get yourself in trouble by losing money. And so when I tell you not to trade or just sit on the sidelines and wait for the market to give us an opportunity, that's what I'm talking about.
Hey, a couple quick programming notes. We're halfway through the morning session here. We've got some new people that are coming in as guests today. Welcome, guests. Let us know what you're trading. Use the chat feature to respond. In this service, we are looking to help people that are interested in trading as a new trader or as a trader that's been around for a while and feels like they're not getting it done. The approach here is price action trading, which has been around for a long time. It's a technique that Sal Shul, your host, has been utilizing for the last 25 years or so in his trading. He is a veteran of the exchange in Chicago. He'd still be down there if it wasn't for the pandemic. He has a private trading booth. Individuals would connect to him at his booth. He would work with those individuals around him on the trading floor. And they were independent traders that had to make money to survive and excel on the floor. And he developed a technique called price action for his own trading, which has a particular sort of roadmap to come into a trading day. And it starts out with setting levels right around the cash open as opportunity points and advantage points for Sol's trading. And now you can make those advantage points and opportunity points yours based on this service. So the levels are given out in the morning and they're repeated. They're also posted during the trading morning. And as the day progresses, there's adjustments made based on the reality of the market, price change, momentum, and follow through. But the key here is how do you, as an individual, learn this methodology, take advantage of the opportunity of having better levels, and really concentrating on your trading on your own platform and how to communicate back and forth with Saul, how to be part of the family, and start to look at the options in front of you to be able to sign up and be part of this world. So I've got an opportunity. Usually it's $379 a month here. Right now he's got it on for $100. It's changing on February 1st. So if you have it in mind to do it, take advantage of it. It's going back to $379. I'm going to send out to everybody a chat which has the discount and the discount link that can only be found in Zoom in this service. If you're coming in from the outside, join us on the inside. Log in at pitiq.tv. It's pitiq.tv. Hey Anupam, welcome back. Hey Ben H, welcome. Hey Chad, Christina. Hey Dean, Don. Hey Douglas. Hey Douglas, I reached out to you a bunch of times before. Just let me know if you're back, Douglas. Hey Ian. Hey Frank. Glenn. Hey Greg. Joel KG. Hey Kevin M. Kurt. Mark S. Mark with a CS. Mark L. Hey Maureen, hope everybody's doing well. Oscar. Peter. Hey Saul B, I've exited you a few times because I don't seem to be able to communicate with you. I know you sort of like pop in and then I kick you out and you pop in and I kick you out. You've been around for a long time. Are you interested in Saul's monthly? Yeah, no, it's been good. I think the interest in trading has really picked up. And you can see based on the media that there's a lot of people at home that I guess were gamers based on the gaming community, and they have decided to make money for themselves, which is all good. So Saul, let me know if you're really there. Hey, Steve P, Timothy V. For those that are part of Saul's class, and whether you were in the class in 18, 19, 20, you can still come in when Saul gives class. Just have to be part of Saul's monthly. And obviously, I think you'd probably want to take advantage of the $100 a month. So anyway, that's all I got for you. Saul will be in and out again. We're halfway through the morning session here. And again, this is about you, so ask questions. If you want a trading platform or be steered to a trading platform or have the opportunity to talk about a trading platform, let us know. You should be able to trade against real-time data in simulation, and that's part of it. This is a learned opportunity. It's a discipline. It's like the difference becoming a gambler and a professional gambler. So you want to be the professional gambler, I would believe. And anybody that hasn't signed up for Sol's monthly, do it now before it goes up. If you do get the $100, it doesn't roll over to $379. It stays at $100, so it's a great deal. And welcome aboard. And thanks for those that are part of Sol's monthly, and then those that are in his class. Thank you.
All right. Well, the market drifted down here. We said we'd have support right here at the 88 to 90 area. Market went down right down to 88 there, and then popped back up here a little bit. So again, waiting for the opportunity is very important. Trying to find the level there where we can find the good support area that'll give us an opportunity to to make money. And again, if you wanted to get along, we were talking about the 88 to 90 as having some support, and we're trying to bounce off of this level up here very nicely here. So patience is very important. Waiting for the opportunity again to present itself is very important. And if you did jump in there, get a nice rotation here off of the 88 area. Again, we are trying to take advantage of ebbs and flows of the market, and we kind of let the market kind of dictate where and when and what we're kind of try to do. It's gives us a good bang for our money, and it also tries to keep us out of trouble. And look, now it doesn't mean that that level is going to work. It just means that it was a better opportunity there to get long and to take advantage of a little rotation to the upside. And if you want to try to stay long, have a trailing stop, if take some profits for sure. And then if you have any extras, you can put a stop in there to back you up a little bit. You can do that as well. But different ways of trading. I mean, there's not one exact right way or not. So you have to, just find the opportunity that's you are comfortable trading with, and then implement those opportunities for yourself. We put together a training methodology that encompasses a whole bunch of setups and levels and waiting for opportunities. And you got to find the trades that not only that you recognize, that you can understand why they would work, and also make sure you know where your stops are in relation to that to those entry points. All right, so nice rotation there off of the 88 to 90 area we suggested earlier. Nice popping back up here. Again, it's a matter of waiting for the opportunity, waiting for a support level instead of just jumping in there. Anybody have any questions? Please feel free to ask them in the chat box area. All right, again, nice entry point there and that support level. And it's kind of what you have to, I mean, at this point there, you should be taking some profits. You got good solid 10 points on this move here. So you get above 01, we probably might go retest the 06 high. But if you did buy them down there around the 88, 89 area, a nice quick pull back up here, got yourself a nice little trading opportunity. Again, this is what we do here. We try to show you where these levels are that we think that the market would find some support or resistance, and let you find a way to maximize your entry points so that you can maximize the profit potential that you have, and also minimize the risk as much as possible. And this is a risky business, that's for sure. again, so if you got a little opportunity there to make to buy the level of support that we suggested, nice little trade. All right, so we've got a nice rotation there. Now we got to get above this 01 here for us to go retest the high and maybe push up to that 14 area. All right, they're coming up here retesting the high. If you, I was gonna say, if you bought them at 01, you're getting paid off, and then we're down to even. I couldn't even spit it out fast enough. Wow, that's something. That is some crazy markets here we got going today. So be patient, be careful, pick your spots, trade small, and that way you stay out of trouble and you let the market kind of do its thing because it is whipping around. Again, obviously, two points on your stops are not advisable at this moment, only because it's just moving 3 to 4 point in one gulp. But again, if you find a good entry point, then you don't even have to worry about that. Like down at that 88 area that we talked about. I think it wants to rally, but we're getting some good profit taking. Every time it gets up a couple, they hit the profit and they hit the profit button and they were break it like 3-4 points. So gave you another reason to buy them down there, even when it dipped down there, in case you were looking for another place to buy it. But looks like it wants to try to get up to the 14. We'll see. I think I'll be back just a bit here. All right. As you can tell, we were trying to keep it a little bit long here, looking for our 14 area. If you bought them and maybe were able to stay long, good exit strategy. If not, if you shorted the 14 area, should have been able to make money on the rotation off of that level. One way or the other, hopefully you were able to take advantage of this little move up to 14 and or up against the 14. Right now we got support would be back around the 98 area. Yeah, no heat whatsoever. Not only did you get no heat whatsoever, but maybe you were able to stay long above even area there, or if you bought them against even, you had to take a little bit of heat there, but we finally did make a move. Oops. Well, no, yeah, we said to buy above 01. Went back down to even a couple times. Either way, if you did buy them also down at the 88, that was another nice little buying opportunity. Either way, hopefully either you were long going up to it and or short coming off of it. Like somebody said, zero heat on that trade. 14 is a high, and we got a nice 9-point rotation coming down here in the last 6-7 minutes. So hopefully you were able to take advantage of that opportunity. These are the levels that we gave out this morning. Right when the market opened up, and we kind of use it as a guide for us to be able to trade the whole day, as the market pretty much has recovered most of yesterday's intraday trade, and we're trying to make up for the gap now from yesterday's opening to the day before. So we'll see what happens going into that. But yeah, GameStop is a what is it? GameStop is it called? Yeah, was trading at $483 an hour ago, and is down to $153 right now. Guess the party's over there, huh? Isn't that crazy? $483 an hour ago. After the market, it opened up 25% lower, rallied to $483, and now it's trading at $153. I don't know. That's called like who wants to trade that, right? It's crazy. They have to come up with some. So I guess these companies are targeting. Reddit is targeting. You know, you can find these companies. There are a lot of companies like this that are trading at a very small price, low volume every day. Maybe they trade 4, 5, 10,000 a day. They can, you can easily manipulate the market if you consistently come in there and try to. Yeah, it's 123, 126 now. It's even less than that. So, the party seems to be over there in that little charade. A lot of people lost a lot of money, though. Well, at least that one hedge fund did anyway. You knew something was up when yesterday the option price for the $100 puts was trading at $43, and it was trading stock prices at 300 and some. What kind of option price is the put trading at $43 when it's $200 above the price, the call, the put price? It's just like, it's crazy stuff. Definitely stay away from that stuff. That's all we can say. So I don't know. I mean, let's put it this way: all those Reddit people who were buying it and had it and were trying to push the market higher, they did. And I'm sure they were getting out when they were telling people to buy it. That's the thing. Well, let's hope that I hope the normal people, like the people sitting on the sidelines who don't usually trade, did not decide to jump in there and buy that stuff all of a sudden. Let's just hope that didn't happen. Where do we post our the daily levels? Well, I give them out in the room here, and if somebody, yeah, there they are. They're posted right now in the room. You forgot on the resistance. There's 14, 23, 31, 41, and 53. So you got there's a 23 between and a couple others. So if we got 14, then 23, then 31, then 41, then 53 on the upside resistance. But they're printed. This is a trading room. We trade here every day. We look for ebbs and flows, also opportunities where price action gives us an opportunity to find support and resistance levels as well. Once the market paints some bars, we did have a buy there at the 88 level just a little while ago. And that was the low of that move. And then we're trying to keep the long coming up here. We set up a little bit of a buy also above the 01, looking for the 14. And if you were able to get long along the way, or if you just sold the 14s, you did all right. All right, so now we got supports would be back around the 98 area. If you're looking for an area, if you're looking to cover some shorts or maybe a little support, but anything below 95, you want to be out of any longs. On the upside, next level of resistance we have is the 23 area. So kind of in the middle here, just be patient and watch. But that's kind of trades we had. Again, once the market relaxed a little bit, we were able to get long. We made our money on. We made some money on the other levels too. Like I said, the only level that we really got run over on was the 85. But it worked out well against the 93. But it happened all in one move, so you had to be really quick there. And maybe some of you weren't able to maneuver that little move, but hopefully the rest of them worked out very nicely, and our price action opportunities also worked out very nicely for us. All right, so we like to trade the morning hours. It gives us good ebbs and flows. We focus more on that than late afternoon. Late afternoon gets a little bit trickier. The volatility is less, the volume is less, except for yesterday, obviously, the volume was all there all day. It could be here all day today, too. I'm just saying that it works better. The opportunities seem to flow better for us in the morning hours than they do in the afternoon. As long as we made a little bit of money this morning, we should be happy. And we'll see what happens the rest of the day. Get back here in a bit.